Hello learners, welcome to our session today. So in our session today is a continuation of what we've been doing, and I want us to handle an illustration question from our past paper in regard to flexible budget. And that question is going to come from May 2017 question number 3 for the students who are doing advanced management accounting, and also the same concept will be applicable to the students who are doing management accounting section 2. So this is a question that you are going to handle. As you can see the question, we are told in this case that you have been provided with the following operating statement, which represents an attempt by a firm to compare the actual performance with the budget for the quarter which has just ended. So the budget for the quarter which has just ended. Then we are told that number of units sold, budget, and we have the actual. We do have the aspect of what? The variance. Our sales figure I'm given at that point. We have cost of sales where I was given all variable. Materials, labor, overheads, total variable cost I'm given at that point. Fixed labor cost I'm also given. Also on the same case, we are told that selling and distribution costs, we have fixed and variable. Administrative costs, we have fixed and variable. Then the examiner has given us the net profit for budget and for actual. We also have the component of the variance. Going down to the question, we are told required using a flexible budgeting approach, redraft the operating statement so as to provide a more realistic indication of the variances. Very key element. Number 2, we were told explain why the original operating statement was of little use to the management, So after going through that question, my good students, a good concept that should always ring at the back of our mind, we are going to ask ourselves if we can still recall the whole concept of flexible budget. Because remember, we say that this is a budget that's going to be prepared to adjust the original budget to reflect the actual performance. That is what we mention whenever we are talking of flexible budget. I'll be looking at a budget which we are going to, this is a budget which reflects the adjustment of the original budget to reflect the actual performance. This is what we mention when it comes to flexible budget. Then again, if we can go back and see what we did, we say that for us to adjust our original budget, I must prepare what is known as what? Flexing ratio. I must prepare our flexing ratio. And in preparing our flexing ratio, we mentioned that I'll be taking our actual units. We divide by the budgeted units. And what is the key element that we will be adjusting? In this case, we will be adjusting 2 components, and that is the aspect of what? All variable costs. And remember, the variable cost that you are adjusting here, it should be a variable cost that is going to be affected by the level of production. It is the variable cost that's going to be affected by the level of production. Whenever we are talking about the level of production, in this case, we are looking at the number of units. Then, another element to be affected by the flexing ratio, we talked of what? Sales. And in this case, we are talking of sales in terms of what? In terms of the value. We are talking sales in terms of a value. So this is what we mentioned earlier on when we introduced flexible budget. So given our question there, which you've gone through it, and I believe you've taken probably a screenshot of the question, we were required to redraft our operating statement using flexible budget approach. And this is how we are going to handle it. This is how we are going to handle it. So we've done a recap on what we did. We've done a recap on what we did in regard to the flexible budget. In regard to the flexible budget. So remember, you can get more of these videos in our phone application, which is downloadable from Play Store. If you go to Play Store, just search Mdarasa, download the phone application, very user friendly. On that case, select the course and unit that you prefer. You'll have access to the video tutorials, you'll have access to the class notes, you'll have access to revision question and answers, and also you'll be having lecturer support on the same application. That's the unique part and the best features that we have in our phone application, Mdarasa. So if you've not downloaded the phone application, just go to Play Store right now and download Mdarasa phone application. It will assist you more so right now when you are preparing for your forthcoming examinations. So looking at a flexible budget question, we need to prepare we need to redraft our operating statement. So in this case, allow to redraft our operating statement. So talk of our operating statement. The examiner wanted us to redraft our operating statement. Operating statement. We need to redraft our operating statement. And before we redraft our operating statement, remember, first thing first, I must determine our flexing ratio. We must determine our flexing ratio. So we've said that my flexing ratio, the one that I'll be using all through, our flexing ratio in this case, our flexing ratio, we should be talking of our actual units. We divide by the budgeted units. We divide by the budgeted units. So come to our question. What was our actual units given? The actual units given in our question, if you've taken a snap on that, on top there I'm given the number of units. For those probably who are joining us, we are doing a question which was tested in May 2017. Question number 3. We are doing a question which was tested in Advanced Management Accounting, May 2017. Question number 3. So, looking at that case, number of units given. Budget, I was given 640. The actual, I was given 720. And in doing a flexing ratio, therefore, my actual units, I'm given 720,000 units, right? We divide by our budgeted units, which in this case, I'm given how many units? 640,000 units. So that should give us our flexing ratio. And in our case, if we do 720, we divide by 640, I can see we're getting a figure of how much? We should be having 1.125, 1.125. So this should be our flexing ratio. It is this ratio that I'm going to use to adjust our budgeted data. Remember the concept of flexible budget. So in our case, we are going to talk of our flexible budget here. We are going to talk of our flexible budget. And we are going to talk of our actual budget, or rather our actual results. Our actual results. So in redrafting the operating statement, of course, you know very well I should be having first thing first, which we should be talking of sales. So I'm having our sales figure here. How much did you have for sales? Remember, what are you adjusting? In this case, we will be adjusting the budgeted data. And if we can look at our question here, sales figure I was given for budget, I was given 1,024,000. That is 1024. That is the budget that I was given initially, 1024. So here is a point that you should get it very clearly. I'm given 1024 as our actual, or rather as our budget. To achieve my flexible budget, I'm going to take the 1024, we multiply by the flexing ratio that we have determined here, which is 1.125. So I'm going to multiply by 1.125. The figure that I'll be having there is what you are going to term it as what? As a flexed data, which in this case we'll be talking of flexible budget. So therefore, 1024 times 1.125, I'm seeing I'm getting a figure for much. 1 million, remember our figures here are in thousands. Our figures here are in thousands. So I'm getting a figure of 1,152,000. That is our flexible data in regard to sales. What about our actual? The question would be, will the actual change? The actual, remember, at this point, it will not change. So I'm going to take the actual figure that I was given, which in this case I was given an actual of how much? 1071. That's the actual figure that I was given. That's the actual figure that I was given. So having that case, you can ideally at this point you can also determine our variance. Of course, we can determine our variance. And the variance in this case, remember, I'm comparing the budget and the actual results, and we are talking of revenue. A good student by now who is doing advanced management accounting should be able to know the different type of variances that we'll be talking about. And we'll always talk of favorable variance and adverse variance. So looking at our revenue here, my flexible budget is 1,152,000 in regard to sales. Our actual is 1071. A good student will tell us if I'm having a favorable variance or an adverse variance. Because if you look at it clearly, my budgeted figure is more than the actual, meaning that in this case we generated less revenue than what we had anticipated. So in such a case, I'll be having a variance, and this variance will be against us because I'm generating less revenue than what we had anticipated for. So therefore, I should be talking of a variance of 81. 1152 minus 1071 should be having 81, and this is what? Adverse variance, a variance that is against us. After we are done with that, we go to the next element to be affected by flexing ratio, which in this case we'll be talking of what? Variable costs. So talk of our variable costs here. We should be talking of our variable costs. Looking at our variable cost, the same case, I want us to identify the variable cost that I was given. Like in our case, the variable cost given, you are given how much? look at our question. Identify all the variable costs given with the actual data that we have, with the actual budget that I was given. So, number one component, the other I'm seeing I'm given there, I'm given what? If you are together, the first variable I'm seeing I'm having material, right? We do have material, so I should be talking of our material. Budget figure I'm given how much? 168. Stock of labor, variable. Budget figure I'm given is how much? 240. Stock of overheads, OHDs, I'm given a figure of how much? 32. Good. Come to another variable cost given. I'm seeing we do have selling and distribution cost, variable cost. So selling and distribution cost, variable cost given, I'm given a figure of how much? I'm given 144. Are we seeing that? Then come to another variable cost. In this case, I was given a variable cost in relation to what? In relation to admin cost. So admin cost, variable given, I'm given a figure of how much? I'm given a figure of 48 being our variable cost. So after I've noted the original budget I was given, if you can recall, we've said that flexible budget, I'll be adjusting the original budget to reflect our actual performance. And in such a case, we have our data there. So it will be upon us to adjust our figures with what? With the flexing ratio that we have just determined. So if we can start with material, I know very well that my flexing ratio is 1.125. So in this case, I should be multiplying by 1.125, 1.125, 1.125, 1.125, and 1.125, having our data there. So our flexible budget in relation to aspect of variable cost, we should be talking of how much? The first point, I'm going to take 168, we multiply by 1.125 to give us 189. So I should be talking of 189. 240 by 1.125, I should be talking of 270. 32 by 1.125, I should be talking of 36. 144 by 1.125, I should be talking of 162. And 48 by 1.125, I should be talking of 54 here. So that is our flexed data in relation to what? Variable cost, in relation to variable cost. So at this point, we can come and copy and paste the actual data that I was given. So the actual data given, my good students, you can see for materials I was given 144, 288, I was given 36, I was given an aspect of in relation to selling and distribution. You can see we do have a figure of 153. And when it comes to admin cost here, I was given how much? 54. So this is our actual results which I was given. So confidently we can come and determine our total variable cost. We can come and determine our total variable cost. So the first point here, we should be having how much? I should be talking of 189 plus 270, 189 plus 270, plus 36 plus 32. That is plus 36 plus 162 plus 54. I'm having 711,000. I believe all of us, we are getting the same figures. Then talk of our actual results. I should be having 144 plus 288 plus 36 plus 153 plus 54. So therefore, I should be talking of how much? 675. So up to this point, clearly, we can come up with what? Our variance. My budgeted data in relation to our cost, we had 711. But my actual results, I'm having 675. Meaning that I'm spending less than what we had anticipated. So the difference, is it against us or is it in favor of us? So clearly you'll see that this difference, it is in favor of us because I'm spending less, and it is in favor of us with how much? So I should be having 36, which is a favorable variance at that point. That is in relation to total variable cost. This is total variable cost. Total variable cost. So therefore, after we do have that case, we can now determine the fixed cost. Remember, fixed costs will not be affected. Fixed costs will not be affected by the flexing ratio. And in that case, were we given our fixed costs? Let us see that question. We were given our fixed costs here. And the fixed cost given, looking at our question clearly, I'm having selling and distribution fixed cost. I'm having administrative cost. So those are the fixed costs that I was given. Those are the fixed costs that I was given. So I should be talking of selling and distribution, an aspect of what? An aspect of admin. So fixed, talk of selling and distribution here. Selling and distribution cost. I was given a figure of how much for fixed. I was given 72. Right? The aspect of actual fixed, I was given how much? 83. Admin costs. I'm given admin costs, a figure of how much? That should be 184. And on the other case, we do have aspect of 176. Then don't forget there on top I'm having what? Fixed labor cost. So talk of labor cost. I was given budget data for labor cost. I was given 100. I'm having 100, correct? That should be 194. So I'm having 100. And you do have what? 94. So therefore, clearly, we can clear this question now, because at this point, I should be talking of how much? 72 plus 184 plus 100 to give us a figure of how much? 356 total fixed costs. And on the other side, I should be talking of 83 plus 176 plus 94 to give us a figure of 353. So the same concept will apply. At this point, I can clearly determine our variance. I had budgeted for 356 in regard to our cost. I'm spending 353. So I should be talking of variance of 3. In that case, that variance, of course, is in favor of us. Because you can see here, I'm spending less than what we had anticipated. So after we do have our total fixed cost, clearly we can now determine our profit. We can now determine our profit. And how do you determine our profit? I should be having our budget sales, which was 1152, minus 711, minus 356, to give me a figure of 85 here. What about the actual? I should be having 1071 minus 675 minus 353. So I should be talking of 43. What about our variance? I should be having a 5 minus 43 to give me a figure of 42. To give us a figure of 42, which in this case is it adverse or favorable? This is revenue. Remember, I had anticipated to generate a profit of 85, but I'm ending up generating a profit of 43. Being a revenue, this should give us what? Adverse variance, because that variance is against us. So this is our net profit. This is our net profit. So ideally, you can see clearly that working out flexible budget, key element to grasp is how to determine the flexing ratio. After we have determined the flexing ratio, items to be adjusted by flexing ratio. Talk of sales and variable cost. So after we have determined this, I believe we should be very comfortable in handling any question when it comes to the aspect of flexible budget. As I mentioned earlier on, we have a phone application which you can download from Play Store. If you go to Play Store, search M Darasa, download the phone application, create your account if you're using it for the first time. After you've created an account, on the dashboard, we have categories of courses that we do offer, which includes Kasneb courses, which includes NEC courses. We also have web development courses which you can study on the phone application. We've also provided assisting our ladies to learn how to cook. We have recipes which you can get in our phone application, and so much more. To that juncture, my good students, in case you have any query, you can always talk to us on 07 08 068 851, and we will be here to assist you. Thank you so much, and I want you to join me in the next session, whereby we are going to handle another question for flexible budget and see how easy these things are. Thank you so much, and let us meet in our next session. Thank you.